Hi everyone, welcome to Value. So today we're going to look at Climate Change Crisis Real Impact 1 Acquisition Corporation. Quite a mouthful and a very unique name. No one is copying that name anytime soon. And I'm just going to call this the Climate Change SPAC because it's just going to be pronouncing that name all the time. Now this SPAC is up 50% in the pre-market, so something must be up, and you would not be wrong in guessing that. So it's merging with a company called EVgo, which has the largest public fast charging network for electric vehicles in the US. So already we're looking at one of the larger players in this race, and if you know how big EVs are going to be in the future, you can already assume why this company is up in such a big way. So we're looking at a valuation of about $2.6 billion. If we look at this $20 price tag, that will be basically double, given that it's the base is $10. And yeah, at 2.6 billion, we're looking at a $5.2 billion company immediately. And yeah, to save you some time, there's a company called Switchback Energy Acquisition Corporation. They really don't make these name shorts, do they? Now this company would be valued around $10 billion, and it will be for a company called ChargePoint. Now ChargePoint itself is alright, so ChargePoint is quite a large player itself, and this company is boasting that it will have faster growth in terms of revenue than ChargePoint itself. So here we've got revenue growth for 2021 to 2024. So basically over the next 4 years, EVgo is expecting 151% growth, ChargePoint 70%, EVbox 66.9%, and Tesla 25.6% for the revenue growth when it comes to their business model. So yeah, when you look at this comparison, EVgo looks amazing, does it not? So yeah, we look at it and we go, okay, well, firstly, you've got amazing revenue growth, great EBITDA growth, and also great EBITDA margins as well. 36% compared to 16% for ChargePoint, 25% for EVbox, and 20% for Tesla. So already the metrics look amazing for ChargePoint. Well, not ChargePoint, for EVgo. And yeah, like you can see, yeah, at its 2.6 billion valuation, initially it doesn't look too bad. Hence why this SPAC is up 50%, because everyone's looking at it and going, at 5 billion, you're definitely worth it, because if ChargePoint, who isn't growing as quick as you, is worth about $10 billion, then yeah, all of a sudden we're looking at this and going, actually, you could be potentially be selling for about $40, and you would be on, ChargePoint's level in that sense, which wouldn't be crazy at all. It would just be measuring this and going, you'd just be on par with one of your peers, even though you grow quicker. So already immediately I can tell you, based on the market perception and valuations, this company potentially has some way to go. Of course, it is up 50% in the pre-market, so there will be some pullback before it continues up higher. But it really signals quite a bit of potential in this company for EVgo. So with the merger, there will be $575 million that will be given to EVgo, and they'll use this to further build out their network. 400 million of this comes from a private placement. And yeah, as it says here, EVgo is the nation's largest electric vehicle public fast charging network in the US. Yeah, and it really, solidifies what this company is trying to do. So it's got 818, fast charging sites, which have 1,412 current DC fast chargers, and are looking to build out another 2,750 charges to be added under the GM contract. So they're working with GM to build this out. And yeah, they've got 220,000 customers. They operate in 34 states, 68 major metropolitan areas, and they currently have about 50% of the retail DC market share. Which, yeah, it really shows where this company is at in this current situation. And if we look at, as we already saw the slide, the growth is amazing. And as it's put here, it's at a very, very attractive valuation. Currently you have ChargePoint being worth 41.8 of its 2021 EBITDA. Tesla's at 107. So yeah, you can look at that and go, wow, they're up quite a significant amount. So hence why we look at EVgo and we go, okay, well, if we look at their value, they're about 6.2. So yeah, all of a sudden, it's all everything else looks quite expensive in comparison. They've got this deal value of 2.1 billion, which is minusing off the cash, which I don't necessarily always agree. I think you should always just use the overall company value, because you're still really burning this cash in the future anyway. So I'd say measure it at 2.6 rather than 2.1. But those are the tricks companies like to play in order to make their statistics look marginally better. So I'll just allow them to do that anyway. So current revenues are looking about 20 million this year, growing to 54 million next year. So you can kind of see the growth trajectory gets much larger as it goes. Then 166 million in 2023, and in 326 in 2024, and in 2027 it rises over $1 billion to $1.289 billion, which is quite incredible. So yeah, we're looking at a company that potentially is going to be a massive company in the future. And I think they're looking to hold around 20% of the market share throughout the next decade, which will be quite a feat because they'll have to keep constantly expand while everyone else is also expanding. So I'm looking at this and going, wow, this is in a sense quite the company, because it is going after the whole EV network. And it wants to own about 1/5 of the fast charging network in the US. And I think fast charging networks are the way to go, because eventually battery sizes are going to get so large that basically fast chargers are the only way to go, and anyone not doing fast chargers possibly has to overhaul their network again just to catch up. So by already starting at that fast charging network, you're already putting yourself maybe like 5 or 10 years ahead, when a lot of vehicles will probably, the current fast charging will be the normal in the future, if you get what I mean. So already immediately, I would say EVgo is basically future-proofing itself, but it's also making itself such a big player in this situation as well. Hence why it's such a compelling company to buy into. And even though we have ChargePoint being worth $10 billion, I actually see this EVgo eventually being worth more than this company, because it's just in the right area, right time, and it's doing stuff that's also a lot better as well. Because, as I reiterate, that whole aim of just starting off with fast chargers immediately starts to put you in a really good space. And hence why the market's so excited about this, because they're looking at this and going, you're doing a charging network, Biden is in favor of you, and in the next 4 years, everything is going to be in your favor. So you really want to buy things that are going, in a rising tide, basically. And yeah, like this company is probably the one to buy for the next few years for sure. If you are like, you know, in the short term, it's very hard to tell where this company valuation will go, but in the long term, you know where the valuation is going to go. So yeah, like this one definitely offers quite a bit of value on right at the current valuation, even though it's around about a 5 billion valuation right now. There's a big upside to come. Particularly when we look at ChargePoint and go, that company is at $10 billion. This one is at $5 billion. So there is a good upside, and in a sense, it's still is at a margin of safety because you're paying for one of America's larger charging network players, and this one will not just stop, or go slower. It's going to go quicker as it goes, which is going to be the really, really impressive thing. There was a slide before that just talked about how many charges they'll have. So they're going to go from 2,211 charges this year to eventually 16,212 charges in the space of about 7 years. So you can kind of see like these guys are going to accelerate what they have. Basically, they're looking at adding about 50% more charges over the next few years. And then, like over time, they're basically looking at adding 2,000 to 3,000 charges after that, which is pretty amazing. And it will just really further cement their situation. And also, like all the big players want to use this company. I think they talked about, even Tesla as a fan. So as it's put, EVgo is routinely the first call for major OEMs, further strengthening its position as the DC fast charger leader. So with Tesla 770 connectors to be installed on EVgo chargers, enabling Tesla charging across EVgo network. And in GM, as I've already put, they've already got a contract with GM for development of 2,750 EVgo chargers. New stations will be available to customers starting 2021, and also initial collaboration with Nissan North America in 2014 for pilot. So you can kind of see like these three giant motor companies want to partner with this company. And that's just the start, and as it goes, this company is just going to get larger and larger as they go. There was a slide that basically sums up here. Basically, it sums up everyone that really wants to work with them. Over time, originally when I started in 2010, they didn't really have anyone, and then as time has gone on, they've just signed up more partners and more partners, and you can kind of see that momentum for this company that over time they're just going to grow to a massive giant in this space. And if you kind of think about if everyone switches to EVs, who's going to be the biggest player? Where's everyone going to charge their cars? And hence why we're looking at this and going, EV charging companies are one of the ones to buy, particularly if you're a big supporter of the EV race. And particularly with Biden also supporting this, that hey, he sees this being basically the thing that stops people from getting EVs, because no one really wants to get electric vehicle unless there's actually a proper charging network. And under Biden administration, they want at least 500,000 plugs. And currently we're at about 90,000 in the we're looking at numbers around 90,000, and that is for 28,000 US stations. So there's a long way to go, and companies like EVgo are just going to be supported under the Biden administration. because everyone's basically pushing towards EVs, every government at least. Yeah, so I think it's a great future for this company, and it'll be a great future. Yeah, buying some and putting it in the bottom drawer, of course, and then seeing how this goes, but only if you believe in the whole, EV evolution, that this is happening, that there's a big race to get everyone to change to EVs, which I think will eventually happen anyway. So yeah, it'll be an amazing future in the next 5 to 10 years, and this is one of those companies that's going to be at the forefront of it. Right, so if you've got any questions or any comments, just post below. Until then, good luck investing, everyone.